Well, I think it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. Like I would really advise people to not have margin debt in a volatile stock market, and from a cash standpoint, keep powder dry. You can get some pretty extreme things happening in a down market. Like Brett Johnson, who was a CFO, who is a CFO of SpaceX, was at Broadcom in 2000. And he said that, and that's a good company making good products. And he said from peak to trough, I think in less than 12 months, Broadcom went down 97%. So like even if you had a small margin loan there, you got crushed. It subsequently recovered, and I think to much higher levels. But if there's like mass panic in the stock market, then you got to really be careful about margin debt. But I mean, this is just as we know, the economy is cyclic. So and we're somewhat overdue for a recession. And my best guess is that we have sort of stormy times for a year to a year and a half, and then things start to dawn breaks roughly in Q2 24. If I were to get, that's like my best guess. Recessions don't like booms don't last forever, but neither do recessions.
And it's a 14-year boom, so a 6-quarter recession seems like that might actually balance out. The last time it was 4 or 5 quarters, so it's not easy.
I have been guiding our portfolio company CEOs to be at cash flow break even now or extend runway to Q1 2025. And they're 25. Yes, because I think Elon and I are kind of roughly in the same place we have been for a while, which is like, mid 24 is when the recession ends, and you need to give yourself 2 to 3 quarters of buffer so that you can go and raise around, which takes a quarter to 2 quarters. And once you start to get escape velocity out of a recession, having money through end of Q1 2025, I think is a minimum requirement. And of the companies that I think were the most precariously positioned, there was 5 of them that got their acts together and really did it. But these are all CEOs of companies that, if I said them, you would know some of them.
Yeah, I said Stan Druckenmiller. He, as you recall, last year he predicted that inflation would be lasting. This was in spring of 2021 when transitory was the word of the day. This year, he predicted the bear market rally we had in July and August. And I remember back at the Kotu Summit in May, though around that time, he was interviewed, and he basically was saying that as soon as there was a bear market rally over the summer, that he would then put a short position on. I don't know if he actually did that, but he said he was going to do that. And then it turns out that the summer rally that we had was a dead cat bounce. So he was right about that. And now he is predicting a hard landing in 2023 with a deeper recession than many expect. So sadly, I suspect he may be right yet again.
Friedberg, best investor for you, 2022.
Same. I had Druckenmiller. I indicated that he's been doing interviews pretty much every quarter for the last 2 years, and he's been pounding the table, telling everyone what's going to happen, and it all happened. And he even told people the trades in mid-2021. He said he was short long-dated treasuries, and he was long commodities. And if you had put those 2 trades on at that time and held them to today, you would have made a fortune. And so I think he's extraordinary in his ability to kind of see macro in a way that others don't, but also to take extremely brave action with his portfolio. He's renowned for how big the bets are that he makes and how quickly he can change his mind when he's wrong and make another big bet and still get himself out of the hole. He's incredible. So I definitely give it to Stanley Druckenmiller this year.
On a dollar basis, the biggest business loser of this year was big tech. And I think that you saw 3 things happen, which I think are important for the future. The first was it was the most crowded trade, both by professional money managers as well as retail. And that fever finally broke in the second half of this year. And now going into these last few weeks, you're seeing a lot of panicked selling to cover losses and other things. So I think that number 1, that happened. Number 2, regulators basically said, we're going to go after these guys every single which way we can. Mm-hmm. And then number 3, I think it started to change the innovation cycle where people now actually believe that they can't outspend because folks won't tolerate it, and the things that they're spending their money on seem kind of foolish. And so I think big tech is probably not discussed enough, but it was a huge loser for this year.
Friedberg, who is your biggest business loser for 2022?
I mean, this one's just a simple FTX. I mean, that was such a incredible revelation of the scale of the scam and the fraud and the craziness that went on. And I think what was interesting about FTX is it had implications not just for crypto and not just for kind of offshore regulatory and not just for fraud, but also for the investors. We had a whole debate about whether the press and journalists failed to kind of, appropriately investigate this guy rather than give him accolades because he said the right things, which he said he did over IM. And investors failed to do relevant amounts of due diligence or form a board and have proper governance over him because they wanted to be part of the hot new thing and everyone had capital to deploy. And I think what was interesting about the FTX failure is it wasn't just a failure due to fraud, but it revealed so many parts of kind of, systemic laziness and systemic kind of blind eye and systemic bias that allowed and enabled this to happen. It was really a revealing kind of failure. And that's why I kind of gave it the award.
Mr. David Sachs, who is your biggest business loser of 2022?
Well, you kind of mentioned this. I picked Bob Chapek, who's the former Disney CEO. He was Iger's handpicked successor 3 years ago. Then the pandemic hit, which shut down the theme parks. But then I think the big mistake was allowing himself to be mau-maued by woke employees into picking a fight with DeSantis over the so-called Don't Say Gay bill. That caused DeSantis to retaliate by threatening the special privileges that Disney enjoys in the state. And then he had Iger undermining him behind the scenes. This was revealed, I think it was in a Wall Street Journal story, that he was grousing to insiders that Chapek was not soliciting his advice, and he was undermining confidence in him with the board. And recently, Chapek was forced out and Iger was put back in charge.
Fantastic choice for the biggest loser. The Fed trying to play catch up is the worst trend for me, oversteering into the crash. What do you got, Chamath, for the worst trend of 2022?
The worst trend was the continued profligate spending by the federal government. We have record deficits, record debt, and this year we're ending the year by adding another $1.65 trillion of spending that nobody can seemingly account for. It is truly the Christmas tree of Christmas trees in terms of bills. So we have not gotten religion yet around being measured in how we spend money.
Good one.
Worst trend, Sachs.
Last year, my worst trend was authoritarianism growing all over the world. And I think that's a pretty decent prediction. This year's worst trend is the government colluding with big tech to engage in censorship. This is how they're going to do the authoritarianism. We talked about it with Schellenberger and Elon, this whole series of revelations known as the Twitter files. We can see this collusion, this cozy relationship between the censors at Twitter and big tech and the bureaucrats at the FBI and DHS and Pentagon. This is a really disturbing dystopian relationship, as we talked about it earlier. And, I feel like we spend all this time talking about the authoritarianism in Russia and China. We seem to be obsessed with combating that and going to war with that. But we don't spend enough time talking about this growing authoritarianism at home. The media doesn't seem to want to report on the Twitter files at all. Let's focus on stopping authoritarianism here.
Well said. Friedberg, what's your worst trend of
My worst
the year?
trend for 2022 is what I would call interest rate mania. And I think that this is the mania that we've been caught up in on this show, that other people on our thread, people in the business community and the investing community, where everyone's obsession with did the Fed act soon enough or late enough, and that interest rates ultimately drive success or failure with building businesses and making good investments.
All right,
and the truth is, when interest rates go the wrong way, good investments can kind of strengthen their way, can make their way through those environments. Bad investments cannot. Good businesses can make their way through and bad investments cannot. And so I think our mania around the fact that interest rates and the Fed ultimately drove bad outcomes in businesses and investments is a flawed kind of assertion. And we all want to kind of get back to the drunken days where, a low interest rate environment enables us all to be successful and wealthy. And I think that that's kind of changed. So I think it's time for us to get away from the interest rate mania and focus more on solid investing and solid business.